Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now on Wednesday, the 22nd of April, 2020, and getting on just after 5:10 p.m., and that is Central Time. So I'm already into the Thursday trade session, Wednesday night session. That's what was falling out of my mouth there, as the market's starting to roll back a little bit. Pretty strong performance day, and the question is it a bounce? Is it the beginning of something else? And we got to find that out. Metals were strong today too, as they're giving up some of that in the early evening trade. And in the energy markets, we're looking at the crude up a little bit. It's back to $14. That's doubled its price since the other day when it hit $6.50. But these are unbelievably low numbers. Now, I want to warn you in those energies, especially the June contracts, where are you going to put them? What I mean by that is, who's going to take delivery again? If we were tight on space before, what do you think you're going to be 30 days out? If you saw the EIA API numbers, we're building storage like there's no, well, we're building supplies like there's no tomorrow, and we don't have the storage available. Now, at a negative $37, I'm sure somebody found storage somewhere. There had to be room there that they could put it away and try to hold it. But you're not in that game. USO, they made a change today in an ETF there, and what they're doing is they're going to change the weighting. So now it's not just the lead front contract of the futures. Now it's going to go into 40% weighted to the front month, 55% to the second month, 5% to the third. Folks, when you're paying and you're building in all those rolls, I don't know that anybody that thinks they're owning oil that way really owns what they understand. You know, I have my doubts about that. But in any case, let's go to the chart action. So here we are in the S&P, and we've had a heck of a bounce. For the week, we're still down 82.75 points. You would think on a day like today, boy, the market's up, I'm feeling good. You're still down quite a bit. And so far, we have a reactionary high. That's on a closing weekly chart basis only. Let's go to the daily charts. You're stuck at a 50% retracement. That's where you're at. When you're at a 50% retracement, you still got the possibility in play of coming back to these lows. I have different opinion once you get over 62%. Getting back there is very difficult. Anything can happen, but this has still got the good probability in it. When we take a look at the swing line, we can see that we've got a pattern here of a higher high and a lower low. That is not the definition of a trend. That's the definition of no trend. The market's just whipping back and forth right now. When we look at what it's doing, well, the key resistance is above the market here at the moving averages, at least the 200 and the 100. Very slowly, that 100 is narrowing in over that 200, and it's trying to get under it. It's going to take a while. It doesn't get done that fast, if it gets done. The second thing is the nearby resistance is the Bollinger Band top of 29, let's call it 47 and round it off there. And if you got there, it's going to get everybody's attention. They'll go, whoa, this market looks pretty good. If the market were to, from here, break down and close under 29.69, you would say you have a pattern of lower highs then and a lower low, and the market would get out and out bearish. So it's getting a little easier to define what would be bullish, what would be bearish as a chartist. I then look at momentum, and I've lost the embedded reading. Now, when you lose the embedded reading, and that's right here. If we go to yesterday, it was lost also. Okay, now remember, when I'm doing it today, and let's be fair with this right now, this is Thursday. So we go first to Wednesday, and what about the day before? It was lost there. You cannot get it back. So the only thing you can do to get it back is you got to get 3 days in a row where both the red and the blue numbers are going sideways over 80, which takes you back into sometime next week if it occurred. But here's the stronger probability. When you lose an embedded reading for 2 days, and you get a bounce, it's often a sucker play. And the sucker play is, I think the pros sell this market. They're looking for that 18-day average. They're wrong if they get over that last high. I'm not telling you to make that trade. I'm telling you this is what I teach. That's all it is. Is it a lot of risk? You know it's a lot of risk. Right here, from where you're at 2786.5, to get back to the top here, which is 28.85. That's a heck of a lot of risk, any way you want to cut it. So that's going to be, what, 100 points? So understand what you're dealing with always. But as a chartist, I'm not worried about that. I'm more worried about what am I seeing. And the odds favor the market pulling back to the 18-day average of closes. What happened in the NASDAQ? We can't count tonight's trade. We don't know where it's going to finish up, but we know the history of Wednesday and we know Tuesday. Again, both numbers lost their embedded reading. So even with the market up here, I'm now viewing that as your resistance point, the 100-day average of closes. I'm now viewing that if it gets over this number, I have to rethink what this market's doing as a chartist. I come in, I don't see a trend. Like in the S&P, I've got a higher high, lower low, a strong probability because you've lost that reading that prices are going to break down. And the real number that comes into play isn't the 18, it's the 200-day average because it's the closest to price when you lose that embedded reading. The next one I look at is the Dow. I have the same thing here, so I won't go through the exercise. I have the same pattern, higher high, lower low. I have the same analysis. I think price and the 18-day average are going to make a run at each other. I'm wrong if you get back over the high that you made right there, and barring that, I'm looking for lower prices. In the Russell, I don't know what to do with it. It's staying overbought. It's trying to get away from that, but it will require the D line, which is the dark line, to get under 70 to get that accomplished. Right now, it's just overbought. It would throw out a sell signal if prices were to settle under 1166 and actually to take out 1164.60 and close under 1166 and a quarter. That would be the sell signal. What about a buy signal? To keep the buy, you're already on one in terms of higher lows, but you got a lower high. You've got to get back over the highs over here. Haven't done it yet. VIX cash, I'm back to the regular VIX. You know, there's two ways to plot these. And as you can see, higher lows, higher highs. So that's a bit bearish for the stock market. It pulled back to a neutral zone, the 18-day average of closes. Momentum is pointing up, bias is up, trend is up. So until that turns down, that's another notch in the gun that I think that you can get that pullback in the stock indices. It's not a trade I'm giving you. It's what I think the market can do to make a run at those averages. In the T-bond market, as I said, the first challenge of a Bollinger Band is where I think the pros come out, especially when you start developing these sideways action. This is a recipe to get churned up. That's typically what this means. You're waiting for the market now to keep building pressure to get a breakout one way or the other. We'll see. As of going home, the bulls are in control of this. You've got higher lows, higher highs, you hit an objective. If anybody's buying, they're going to be probably looking at that 18-day average as their support zone. In the 10-year note, I don't like what I saw today. Now you stepped out of a trend. You have a higher high, lower low. That first challenge of that upper Bollinger Band, when you hit it, and that was first time was on, that would be Tuesday. You backed off today, and tonight you're doing no good. But you're out of the trend. Higher high, lower low, that's not a trend. And momentum is very overbought. Dollar index. The dollar index has everything still pointing up. You've got momentum up. You're over the 18-day average. The bias is up. You have the pattern of higher lows, higher highs. The next resistance point, if it can make it there, 101.02, the upper Bollinger Band. Eurocurrency. Downtrend, but oversold. Here's your oversold condition. Anytime either of the numbers that make up the slow stochastic are under 30, oversold. Both under 30, nah, they have to go under 20 several days in a row to lock in the bear trend. So it's an oversold market. If it can stretch out maybe the lower Bollinger Band, but I have my doubts on it. It just seems to be hanging here, but you don't want to be, at least I wouldn't want to be long. I still see the lower highs, lower lows fully at work. What's the number I'd now be concerned with? Well, let's go back to the chart. If we look at today, we had a higher high and lower low. What do I say when you have outside days? An outside day, if you take out the high of an outside day down, in other words, a lower close, within the next trading day or the day after that. 2 sessions. If you're using a 5-minute or a 15-minute chart, 2 of those chart periods. If you take it out, it's a sign that the market's lost that momentum that it created that, and it probably wants to get back to the closest moving average or a slow stochastic reading. Here you're oversold. That's the number I don't want to see taken out. And if the market wants to gather some downside legs, well, 107.68, the market's waiting for that price. Japanese yen, you don't get more neutral. You're just sitting on the 18-day average. Lower highs, I could argue higher lows. You just don't have anything here. And what's it entered? The door is just opened. What's the door? Follow the Bollinger Bands. I'm going to take you into my pipe where you can start spinning around in there, figuring what your next move is going to be. Welcome to the pipe. When we take a look at Bitcoin, it's in that pipe. Look at how it came in, and now you're just there. From here, moves happen. Now, we know that there's a group of loyalists to Bitcoin that are just waiting for the halving to take place in May, where suddenly the computers, for all the power they put in, magically, all that power's cut in half. And we're getting to the last groups of coins that can be minted, called a Bitcoin. So they're of the opinion that because of that, because of the scarcity that will soon show up, that Bitcoins will be worth more money. Well, now you understand that part. I still have problems with what they're used for, and I loved your comments yesterday, and I agree. You don't use Bitcoin in a grocery store, but isn't that the concept? It's going to be part of everything we do. And I do know that central banks all over the world are looking at digital currencies. Why not? But the central banks will do it. So they're still going to be tracked. The idea of a Bitcoin is nobody's tracking them. That isn't how it's going to work. They're going to tax the heck out of it. They'll follow it. So if we want to go to a digital currency world, that's fine. You think the governments aren't going to tax it? When we get up here and we look at the correction, so we got to an extreme in the differential between the Brent and the crude off of our calamity with prices collapsing, but I don't think the Saudis are doing all that well with crude oil that's been under $20 recently, and the Brent came back a little. You are 2084, so let's give them some credit, but all the market really did, if we take a look, you got under the lower Bollinger Band. What are the odds of staying under it? 5% of the time. I said in my updates, I think it's going to fight to get back over it. Well, it did it today. 2028's the lower band. It finished 2037. Doesn't mean the trend has changed in any manner. The market is oversold. It's in a downtrend. I think rallies in the market are still going to have a great amount of pros looking to be short this market. In RBOB gasoline, you're caught in this tunnel. Again, that's that tunnel. So you get up to the upper Bollinger Band, you fail. You get down, you fail. And the traders get chopped up as they're trying to catch breakouts in it. Let somebody else have that type of trade. Nat gas, as we said, there's going to be less nat gas around. Now, we're going to get our estimates tomorrow from what the supplies are. We saw the API numbers today. Today was the EIA number, and it's monstrous. I mean, we're just building supplies like there's no tomorrow. That build of supplies will show up eventually as a positive here because there's not going to be that build anymore. The wells are shutting down. You're going to see each week there's just fewer rigs out there working at these prices, less natural gas being produced as well, and we're going to be in warm weather. My gardeners came to the house today, first time of the season. So I was pleased. I saw them. I waved to everybody today. It's on. Of course, allergy season's on, and I don't do well with that. Want to remind you, if you like what I do here, you might really enjoy the Spider ETF video that I publish at the end of each and every day, Monday through Friday. So what it does is it covers for you 27 main Spider in ETF videos. And I know a lot of you like that. The idea that I do these for is I want to give you confidence with your own trade ideas. You may see that I disagree with you. You may see that I agree. I'm also going to, for my subscribers soon, have my live webinars. I've got my Zoom account. I've been learning it each and every day, and I'm getting very close to announcing the first webinars that I'm going to do. Also, When you're a subscriber here, when I do special reports, they're yours. And I am going to do special reports on spiders and ETFs. If you're not part of the subscription, you pay $2.50 a report if you want to see it. This is what I cover. All of these, all the stock indices, the major metals, TLT. When we do a webinar, just give me the symbol and I'll bring up a chart and we start analyzing it. I don't have a staff behind me. I'm not as good as Kramer, believe me. He's way better than I am. I don't know all those, but in futures I do. So futures, I know most of the products that well. This, not my backyard, so to speak, but a chart's a chart at the end of the day. So how do you get involved? Well, it's simple. You go to our website at www.iraepstein.com. And go to the research at the top of the chart, the page actually, and as you click research, it's going to drop down and explain how this works. From there, you can decide what you want to do. There is no contract. You're not tying yourself up into anything. That's the last thing I want to do with people. And I want to make something that is so inexpensive that you get knowledge at a level that makes sense and you're not being gouged and it's not a fortune to do it. I go by the mass. More people, better for me. Tell your friends about this. That's what keeps these shows going. They come in, our viewership goes up, people are buying the subscriptions. That's what this is all about. That's how you do it. I'm Ira Epstein. Thanks for watching, and I will see you all tomorrow.